It sure is. And it goes against the signals that we got from Chairman Powell and his colleagues all last month when they were telling us that we should expect a 50 basis point, a half percentage point rate hike today and another half point in July. But what we got was 75 basis points, as you say, the biggest since 1994. And Chair Powell said, next time it's a question of going 50 or 75. This is part and parcel of the global phenomenon of dealing with inflation that, as you've just been reporting this morning, is much more powerful, much stickier than policymakers had expected. Our Bloomberg team in Sydney has reported about the surprise that the Reserve Bank of Australia foisted on observers just recently with a much more aggressive tightening than anticipated. Well, we're seeing the same thing here in the United States.
Well, why is the strength of inflation such a surprise then, Chris? And where is it at actually in the US, and where is it expected to go?
Well, here, the latest reading for the Consumer Price Index was 8.6% for the year to May. That was the worst inflation since 1981. And we have inflation expectations starting to pick up. So what was giving policymakers confidence was maybe inflation is high now. Maybe households think inflation is going to be pretty high for the next year. But until recently, it looked like households thought longer term inflation, it'll come back down. We have confidence that policymakers are going to tamp down the surge. But on Friday, what we got here was a worrying jump in long-term inflation expectations. A key survey of American consumers showed that it rose to the highest since a brief spike in 2008 when we had global oil prices surging. So this really caught the eye of the Fed. Chair Powell said today that when that number came out, that caught his eye, and that kind of changed the perspective of Powell and his colleagues today.
There is always, though, Chris, isn't there, a fear that when a central bank starts to raise rates quickly and aggressively, as we're seeing there, that their actions will erode economic growth. How great a risk is the Fed running now in taking this action and the actions in the months to come?
Well, you bet, Roz. And indeed, most economists probably are now penciling in a recession for next year here in the United States. Chair Powell saying that, they still think there's a possible soft landing in store for the economy. But the forecast that we got from Federal Reserve policymakers today really amounted to what one observer called a best case scenario. Unemployment is seen going up to 4.1% over the next couple of years from 3.6% today. Inflation is seen coming down toward 2% over the next couple of years. So no real major consequence. Very few observers think that it is going to be so painless.
So what's going to be the impact on the rest of the world, Chris, including Australia, of this rising rate environment in the US?
Well, what we've seen over the past several weeks as investors priced in a much more aggressive Federal Reserve tightening path is a stronger and stronger US dollar. This is essentially kind of, in a way, exporting inflation to other countries because you've got weakening exchange rates in Japan, in Europe, the UK. Look at the pound down to $1.20 now. And that's going to make oil all the more costly for all of these other countries. So a strengthening dollar is one of the major reverberations for the global economy. And if and when the U.S. consumer finally says enough is enough, we can't sustain spending at the pace that we have been, that's going to be a major blow to global demand. You just look at the recent Chinese economic data out on Wednesday, exports to countries, including the United States, were the major source of growth for the world's #2 economy. And you take that prop away, and bad things are going to happen.
Just finally, increasing rates, of course, mean higher mortgage repayments, high loan repayments. Prices and costs are already high. It feeds through to the economy. So how are Americans coping with the economic conditions they're facing now?
So far, and Chair Powell said this today, there's no kind of broad sense of an economic slowdown. The most recent data still show that retail sales are not doing too poorly. The housing market has yet to really decisively turn. There's enormous pent-up demand for summer travel. You look at airports and airlines, everything is packed. There's enormous still pool of savings from the extraordinary pandemic relief programs enacted over the past couple of years here in the United States. So far, we haven't seen the turn. Again, it's more of a next year kind of phenomenon that economists are saying for U.S. recession risk.
Okay, Chris Anstey from Bloomberg, thank you so much for your time.
Thank you.